Okay, take your cursor, your mouse, there you go, your mouse cursor, and get it out of the way. All right, it's recording, and let's do a countdown. And you're supposed to start right at 8, and regardless of people coming on, you know. So you're gonna go now. You're muted, so you got to unmute yourself.
Yep, I'm gonna mute them.
And then we're gonna hang up. So,
Okay.
and then just do a 3, 2, 1 smile. Do a 3, 2, 1 countdown. Okay.
Hey guys, this is Courtney Epps here with Outside the Box Business Solutions, OTB Tax for short. And I just am going to share with you some ways to save money on your taxes today, and just some thoughts to help you have a more relaxing and less taxing life. So we're going to go ahead and get started. And just to give you a little bit of insight about me, I'm an author, a speaker, I'm a mom of 6. These are all of my kids and my husband. And I specialize in tax strategy. That's probably what I would call me, is a tax strategist. I'm also a fractional CFO for 15 companies from $500,000 a year in sales to $13 million a year in sales. I'm originally from South Carolina, and I was born and raised here, and I love to talk. So I'm going to share with you some ideas today that I've learned throughout my 18 years of owning my own businesses. And I want you to understand, first and foremost, I'm an entrepreneur, but I've learned throughout, you know, I went to school to be an accountant, but, you know, I learned how to save money for myself, and that's what I'm going to share with you today. So, you know, my biggest aha moment actually was about 5 years ago. I have been, you know, a traditional accountant, done tax returns for brick and mortar locations, and I was actually involved in a network marketing company, and I had someone reach out to me and say, hey, you know, could you possibly find, you know, do our tax returns? So I was so used to doing tax returns for large corporations and businesses that I did not realize how big of a deal it was to actually have a home-based business. So I did this tax return for someone in the group. I was able to save her $4,100 more than she had ever gotten back on her tax return as a W-2 employee. And so that was my aha moment. And what I did from there is I started collecting and trying to figure out how much money it was truly saving people before they were in a home-based business and after. And what I found is that you can literally save $4,000 to $8,000 a year just by having a home-based business and attempting to earn an income. And so what I want you to understand is that there are 2 tax systems in this country. One is for the W-2 employee, and one is for the self-employed, or the business owner. And so you can actually be both in the W-2 and business owner category at the same time, but understand that there are massive tax deductions for being a business owner. And the reason why is because businesses create economy, and literally the business owner category is to create wealth for you, whereas the W-2 employee category is literally to take your wealth. And so businesses create economy, they create more income, and then they hire employees, and someone has to pay the taxes. So employees in turn end up paying the taxes, and to a tune of about 40% of every dollar is literally going to pay taxes. So, you know, why that's important, you know, you may be involved in network marketing, or you may have a home-based business, and you may get scared of sharing with someone what you're doing and your idea. And what I want to tell you is that the guarantee, you know, not everybody's going to see things the way that you see them, but the guarantee of just opening your mouth and sharing with someone what you're doing could potentially change their life forever, as well as yours. But honestly, the guarantee is tax deductions. So if they decide to join you or not, that's great. And we, you know, obviously want to help them. But if they don't get it, then you are going to save money in taxes. So, you know, why that's important, and I want you to understand, guys, 46% of Americans don't have an extra $400 to their name. And honestly, when I got involved in network marketing, I'm not in it anymore. I love network marketing. I'm a huge advocate for the industry, but I feel like I am better serving everyone in that industry if I stay out of it and share with people why you can get massive tax deductions by being in that industry. So 46% of people don't have an extra $400 to their name. So, and the reason why is because they're overpaying in taxes. So, and that was us. That was our family when we got involved. And, you know, I don't ever want people to feel that way. So, you know, if you share something with someone and they fall in love with it, but they don't have the extra money to get involved, then they're automatically going to push back and say, you know what, this is not for me. And in their mind, they're going to say, you know what, I can't do this. And so they attack you instead of telling you the God's honest truth, which is, I don't have the money to get started. So we can help them free that up. 66% of Americans don't have an extra $1,000 to their name. So you could be potentially changing someone's life by not only freeing up the money in taxes, but then on top of that, being able to help them have an extra stream of income, make an extra $300 to $500 a month. Hey, heck, make an extra $5,000 a month. So, you know, first we need to understand what a tax deductible business expense is. So it is literally, this is IRS tax code, any expense that's incurred for the purpose of gaining or producing income and is incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So what does that mean? Breaking it down for you, it literally means if you're attempting to earn income either today or in the future, and it's reasonable, then it's tax deductible. Now, the reasonable part, that's up to you. You know, I feel like it is reasonable, and I know it's reasonable for me to go to Tony Robbins events and spend $85,000 a year to be a platinum partner. And on top of that, the $40,000 in travel that comes with it. So that's reasonable to me. So it becomes the burden of you after a while, and I'll share that with you. You know, so many people believe in this whole myth that you have to, you cannot make a loss or have a loss in your business more than 3 out of 5 years. That's incorrect. What the tax law actually says is if you are taking losses more than 3 out of 5 years, it is up to you to prove that you are attempting to earn income. So if you have a good calendar, and I'll teach you some other strategies throughout, you're sharing what you're doing, then you don't have anything to worry about. So, you know, my job as an accountant is not to teach people, or as a strategist, is not to teach you how to spend money in order to save 40% in taxes. It's teaching you how to redirect your living expenses and turning that into business expenses by doing something I like to call daily business building activities. So here's what happens. A typical W-2 employee in this country pays on, they're making, like a family of 4 is literally making on average of $60,000 a year. And so I'm going to show you the problem with that in just a second. So they're making, I've got a single person, I've got a married person, $60,000 a year is what they're making per household. They have no business expenses because they're W-2 employees. And here's the standard deduction or itemized deduction. And the reason why I use that is because 96% of Americans are not getting benefit for anything more than just a standard deduction. Here's our taxable income. Now, here's the taxes that we're going to pay based upon that. What ends up happening is here's our take home. The cost of living in America, sadly, is about $53,000 on average. I lowered that just a little for single people because obviously they don't have quite as much in expenses. So here's what's left over. So if you're talking to someone and they're going in debt, like the average household is, $4,000 a year, then they are completely shut down to anything that you have to say. So we have to teach them how they can literally free up that money. And so here's how it works. Now when you take a W-2 employee and you add a home-based business, or it could be just a home-based business, so you could work from home, then what ends up happening is we're going to get expenses, living expenses, and we're redirecting those to business expenses. So here's what happens. When you're a W-2 employee only, you don't get a lot of tax benefits. The only thing that you literally have are itemized deductions. And the IRS last year took away numerous amounts of those itemized deductions. So here's what happens. Itemized deductions, you're either allowed to take that or a standard deduction. The standard deduction in our country, if you're married, is $24,000. It's $12,000 if you're single, and $18,000 if you're head of household. So if you go over that number, you're able to take an itemized deduction. So itemized deductions are things like medical bills, medical insurance, property taxes, real estate taxes, mortgage interest, state taxes, charitable contributions. And if all those add up to be more than the standard deduction, then you're able to take it. But what you don't realize, and what most people don't understand, is that medical bills, you have to go above what's called an adjusted gross income, 7.5% of that, in order to even get benefit for medical bills. So let's say you made $100,000 in adjusted gross income. You would times that by 7.5%, which will be $7,500. So that means the first $7,500, you're not getting any benefit on whatsoever, sadly. So same thing with medical insurance, those combined. Property taxes, real estate taxes, and state taxes now with the new tax laws are capped at $10,000. So even if you paid $40,000 in property taxes, real estate taxes, and state taxes, you would only get benefit for 10 going towards your itemized deduction. Then you've got mortgage interest, and there's some changes that happened this year in mortgage interest. And then charitable contributions. So if 96% of Americans are not getting to take the itemized deductions, then a lot of them say, what's the point? So I want you to understand, now we all have living expenses. So these, as a W-2 employee, you get no benefit from. So things like meals and auto expenses, cell phone, travel, home expenses, office supplies, daycare, products that you're buying, personal development. So sadly, we have all these expenses, but now I'm going to show you how, if you take that same W-2 income and add the home-based business, here's what happens. The medical bills can now be considered tax deductible as a business expense through what's called a fringe benefit. So you can hire your spouse, you can pay them $100 a month, and then your spouse would in turn pay 100% of the medical bills. You would reimburse him, and that will be considered a business expense. Now there's a plan that you have to set up in order to get that, and we can help you do that. It's called a Section 105 plan. It's about $400 a year to set that up, but it can save you thousands and thousands of dollars, if not tens of thousands. If you have medical insurance, 100% of that is tax deductible. And you can see on here, I'm giving you amounts. This is kind of what I see on average. These are not limits. This is just what I typically see on a daily basis that are expenses. So I'm just trying to show you how much money this could actually save you. Then you have property taxes. So property taxes, have clients who have RVs and they drive all over the country. So that's property taxes. If you have vehicle taxes, there's some people that have boats and they're using that for their business and advertising. So those are property taxes that you can write off. Then you have business use of your home. And if you've ever been told that business use of your home is not beneficial or that it's not worth it because it could trigger an audit, that's just not true. So I want you to understand, I would take this deduction if you have a legitimate office in your house, or if you're working out of your home. Let's just say you had 100 square foot office, and you had 1,000 square feet of a home. You would be able to write off 10% of your property taxes, your mortgage interest, your insurance on your home, your repairs and maintenance, your HOA fees. All of these would add up. Janitorial. So if you had someone cleaning your house, so all of those would add up. You'd be able to take 10% of that, plus you would be able to deduct or depreciate your home and your furniture. Anything that you buy for the actual home office, you can write all that off, but the rest of it is depreciable. And then I have people say, well, Courtney, I don't want to depreciate my home because I may have to pay taxes on it if I sell it. That's not true either. You literally get to you don't have to pay taxes on the first $500,000 gain from the sale of your home if you've lived in it for more than 2 out of 5 years. So just, there's just some things I would take with a grain of salt. Read the tax code or reach out to us, or and we'll be happy to help you. So charitable contributions, this is a very important one to me. And I'll share a little bit more in detail on how this works. But if you give from a gross income level instead of a net income, so meaning you give from the money you bring in, the top dollar before you ever pay out expenses, then you can literally write off 100% of this as a cost of goods sold item. So it's no longer charitable contributions. So, and I'll share with you how I do that in a second. And then, you know, guys, I want you to understand. So if I, you know, just say I have a friend, his name is Robert, and I reach out to Robert and I say, hey, Robert, I've got something I want to share with you. So I pick up the phone, I call him, call Robert, I want to go to lunch with you. So Robert's going to meet with me anyway. We're friends. I want to catch up. I get in my car. I drive to Robert. I get to write off 58 cents a mile, or I can actually take an even bigger deduction that I'll share with you in a minute. Is called actual expenses. So let's just say I just write off the mileage. That's 58 cents a mile. Now I get to sit down with Robert and I share with him what I'm doing. So Robert, you know, Robert's a W-2 employee. I'm a W-2 employee with a home-based business or just a home-based business owner. I get to write off 50% of my meal as I'm talking to Robert and telling him what I'm doing. So Robert may say, you know what, Courtney, I'm all in. I love what you're doing. I want to do it. Or Robert could say, you know what, Courtney, I think you're going to hell or jail. I don't know, but this is not for me. And then I'm going to say, Robert, I get it. You know, that's perfectly fine, man. I didn't understand this industry before either. But guess what? I'm saving $4,000 to $8,000 a year this year on my taxes and every year just because I'm involved in something that I'm excited about. I'm going to buy these products anyway, so I just wanted to share it with you. And if it's not for you, that's cool. So at the end of the day, I'm going to write off my cell phone because I called you on it. I'm going to write off my mileage back home at 58 cents a mile. I'm writing off half of my meal. And then on top of that, I'm going to write off my internet because I needed to use that internet in order to run my business. So based on whatever percentage that is, that you're using that internet for business. And then I'm going to write off business use in my home because I'm in my home running my business. So I get to write off a portion of that. And at the end of the day, now I have money to do the things that I want to do. So Robert, here's the thing. You make money, you pay taxes. You don't even get a decision in that on how much money gets taken away from you in taxes. But at the end of the day, then you buy some of your needs and wants. Whereas I, a home-based business owner, I'm going to make my money, I'm going to buy my needs and my wants, and then I'm going to pay taxes on that afterwards. And so I'm going to have a lot more money to spend and have a better life than what I would be giving away to the government. And literally 40% of every dollar I make is what a W-2 employee is giving away. So, you know, he may not get it, and that's perfectly fine. But the fact that I just opened my mouth and I shared with him what I'm doing and I'm passionate about it, I'm getting a tax deduction from it. And then on top of that, we have travel. So, you know, I'm leaving tomorrow to go to speak at Beyond Leadership for Eric Worre. I'm super excited. Like, you know, my life has completely and utterly changed since personal development came in my life, and the network marketing industry has been a huge integral part of that. And so, but I'm taking my son with me, and I hired my kids. So, and we'll talk in a bigger detail on that in just a second. But all my travel is tax deductible. So I'm going to that event, whether I was going to speak at that event or whether I was going to attend that event, that becomes a tax deduction that I can write off. So my hotel, my travel, my Uber drivers, my Lyft, everything that I'm doing. And then I can take a per diem on my meals at $55 a day, or I can take 50% of my actual expenses. So that's just a huge deal. Then I'm taking my son with me. So what I typically do is I will come in either a couple days on the front end or a couple days on the back end, and I always bring one of my children with me to an event. Because one, they're getting the personal development with me. So they're getting to see what I'm doing. But then on top of that, because I've hired them to work for me, I get to write off everything that they're doing. And 75% roughly of my whole entire vacation becomes tax deductible. Now, hiring your kids, this is probably one of the most exciting deductions that I talk about because I have 6 children. So those 6 children literally can save me $78,000 a year that I don't have to pay taxes on. So I'll go into detail on that in just a second, but you can hire your kids. and you can have them do all kinds of things for you. So I'll get in that just a second. I get excited about hiring your kids. And then we've got office supplies. So that could be you need a new cell phone. It could be you need a new laptop, a new iPad. All of those things are tax deductible. And I think that if you guys could share on here, I believe we all have these expenses. So we're all spending money on all of these things every single year. And the only difference is now they become business expenses. The only extra things that I would say that we spend money on are, as a home-based business owner, are things like advertising and continuing education. So you may or may not spend money on these things. I will tell you that continuing education, personal development, whatever you want to call it, going to events, your company events, is probably the greatest thing that you can possibly do. You know, one of the things that I've learned is the power of proximity and about being around the right people. So if you are around the right people, people who will take you to another level, people who are like-minded individuals that, you know, don't settle for being mediocre, that don't settle for being common, that will put you to a different level and force you to be better. So every time I go to an event and I get around people who are not necessarily making more money than me, but they're impacting more lives than me, I want to be better. So I would tell you that continuing education is the greatest money that you can spend, because not only is it going to fix your mindset, but it's going to put you around the right people, and it's going to help you go to that next level, and it's tax deductible anyway. So you need to do it. Then you've got things like dues. So if your company has monthly dues, they're tax deductible. And then we get to cost of goods sold. So if you're in a product-based business and you have to try that product or use that product in order to tell people about it, you know, and I don't know any other way. Like how in the world could you sell a product and not know how it works for yourself? So if you're using that product, or if you have to have that product every month in order to get paid, obviously there's a lot of companies out there that do that, then that product becomes tax deductible. Naturally, any samples that you're giving out, you know, that becomes tax deductible as well. So, you know, just a lot of different things that you're able to take in deductions that you may or may not know about. And there's more. There's things like coaching. You know, you got, I mean, the sky's the limit. Legal and professional fees, things like paying people like me to teach you tax strategy when you have a home-based business is 100% tax deductible. So we went through these expenses, and literally, you know, I've got $34,000, and this is a small amount. You know, it could be a lot more than that, but this is on average of what I see. So here's what happens. Now we have the W-2 employee with a home-based business. We have $60,000 a year, which is on average. So we're not even saying that you made $1 as a home-based business owner. You could suck at sales, and it could take you years to get better, but it doesn't matter. You're still getting the guaranteed tax deductions. And I'm not even going to use my $34,000 number. I just want to show you what it looks like if we wrote off $25,000 a year in business expenses. Now, granted, we only found a couple $1,000 that you were spending extra that had to do with your actual business. The rest of these things are literally money you're already spending, and now you just get to write it off. So we have our standard deduction, we have our taxable income, we have our taxes, we have our take home, here's the cost of living, and now here's what's left over. So you are literally, the difference is $5,000 roughly if you're married, and $6,000 if you're single almost. So here's what happens, guys. I want you to understand this. As a W-2 employee, in order to bring home an extra $5,000 or $6,000 a year, you would have to make an extra $3.79 per hour for every hour that you work. And the average W-2 employee works 2,000 hours a year. So that's 40 hours a week, 50 hours a week, or 50 weeks a year to take 2 weeks paid vacation. So you need to make an extra $3.79 per hour, or if you're single, or $3.05 per hour if you are married. That's huge. I don't think anybody on here is going to get an extra $3 raise this year. So what happens when you actually start making money? That's when it gets really fun. So we have the same $60,000 a year that you're getting from a W-2 income. Now we're having an additional $500 a month from a business. So we have the increase in income, we have the same business expenses with the standard deduction, the taxable income, the taxes, the take home, the cost of living, and you are literally now, just by adding income producing activities, 45 minutes a day, 3 to 5 days a week is what the IRS says you have to do in order to be considered attempting to earn an income. You are bringing home an additional $10,500 if you're single and $9,500 if you're married. So guys, you have to make an extra $7 an hour to be equivalent to that for $500 a month. And here's where I want to stop. I want to share with you a story. I had somebody come to my office about 6 months ago. They were getting a pay increase this year. The husband made $85,000 a year and the wife made $55,000 a year, and they were both W-2 employees. And so they wanted to know, because they'd gotten a $35,000 pay increase, they want to know how much money that was actually going to give them and how much they were going to have to pay in taxes extra this year, because it was going to put them in a higher tax bracket. So that $35,000 extra income only gave them an additional $13,000. Meaning that they're paying $22,000 in taxes to get $35,000. That is insane. So I said, you know, while you're here, because they wanted to have kids, they didn't have any kids, so they didn't have earned income credit, child tax credit, and all that stuff, because that would have made an even bigger impact. But I said, what if we just did away with the $55,000 a year, and we just showed your $85,000 as your income, and the wife stayed at home? What would she need to make? And it was only, that $55,000 was only bringing home $1,800 a month additional income. And the reason why is because it was putting them in a higher tax bracket, so they were paying more taxes on all of their income. And guys, what I'm trying to tell you, so that was $21,000 for the year. And so she was making $55,000. So she was paying $34,000 extra in taxes to make a $55,000 a year paycheck, which is absurd. So I told her, look, you could go and make $1,000 extra a month as a home-based business owner, and that would be equivalent to the amount of money that you're bringing home from a $55,000 a year paycheck. And I mean, that was mind-blowing to me, because I'd never sat down and crunched those numbers. So guys, what I'm telling you is that this can be life-changing for people. And most people don't get started because they think an extra $500 to $1,000 a month is not going to do anything for them. Well, I'm here to tell you that you would probably be better off. And if those people had kids, they would have been 10 times better off to have one of them work, have one of them stay at home, take care of the kids, not have to pay for daycare, not have to pay for an extra vehicle, not have to pay for all the lunches going out every single day, not have to pay for all the extra taxes. And then at the end of the day, they're spending time with their family and they're paying less in taxes, and would have possibly gotten an earned income credit and a child tax credit that they were not going to get because of their income level. So that's just a huge deal. So I want to share that. Now, a couple of these things I want to get into some detail on, and I want to definitely make time for questions at the end. So I'm going to run through these pretty quickly. So mileage, you can take for vehicle, whatever your auto expenses are, you can either take a standard mileage rate or you can take actual expenses. So standard mileage rate, it used to be the best way to go. Typically, you can write off 58 cents per mile for every mile that you use for business purposes. So it's called the shortcut method, and you can't depreciate or write off anything else. It's just that 58 cents per mile. So if you had 15,000 miles for business, then you would take the 58 cents per mile, and that would be $8,700 that you would receive in a deduction off of your tax return. So it'd save you about $4,000 a year in taxes. It's a huge deal. So now with the new tax laws, it becomes better typically for the actual expenses. So how do you determine that? You have to first determine and calculate your business mileage over your total mileage, which becomes your business usage. So if we had 8,000 miles for business mileage divided by 10,000 miles, which is your total miles, that would mean that 80% of your vehicle is used for business purposes. So here's how it works. So you can track all of your gas, your oil changes, your repairs. You can track your interest that you pay on your vehicle, your supplies, your car washes. All those things are expenses. So you multiply that by your total business usage. So if we had $12,000 worth of actual expenses, you would take 80% of that, and that would be about $9,600 that you would get in a tax deduction. But it doesn't stop there. You can actually depreciate the vehicle as well. So here's what happens. If you buy a vehicle that is under 6,000 gross vehicle weight, this does not apply to vehicles that are above that, and I'll talk about that in just a second. But I bought a BMW, a 528i, in December of 2017. And because I bought it in 2017, actually the tax laws changed the next month. I did not know that that was going to happen. So I bought that in 2017. And now with the new tax laws, that vehicle could be written off over 5.3 years, as opposed to what it was taking 18 years to be tax deductible. And so you can see here, the vehicle, the BMW that I bought, I was able to take $11,160 off the first year. The second year, which was this year, this 2018, I was only able to take $5,100. Well, what happened if I bought a new car? And it doesn't have to be new to you, or it doesn't have to be new, it just has to be new to you. So if I bought that same $50,000 car the next month, then I would get a $10,000 deduction the first year in 2018. 2019 would be a $16,000 deduction. So in order to get that benefit, I'm obviously going to buy a new car this year. So that is happening. I was too late on buying it last year. So, you know, what happens when you buy a vehicle that's over 6,000 gross vehicle weight? Now you get to write off 100% the first year that you buy it up to your net income. So you can see really quickly, year two, guys, that's $11,000 difference in the deduction. So that means that's about $5,000 in your pocket just by getting a different car. I mean, it's absurd. So going into detail on that, you know, I want to break down for you. You know, I want a Tesla Model X, and I'm going to buy one this year. It's on my list. But here's what happens. So I buy that Tesla Model X. There's no gas, so it saves me some money. So it makes me happy. It's 100% tax deductible in the first year because the Model X is 6,000 gross vehicle weight. And then on top of that, I get an electric car credit of $3,750. And then it drives itself. So then I can work. I can respond to emails and Facebook messages and all that good stuff while the car's driving itself. But on top of that, because that $106,000 car, I can literally take that write-off this year, then that lowers my taxable income to the lowest level. And what that does is that gives me $16,000 in tax credits that I would not have gotten through the earned income credit and child tax credit. And then on top of that, it's going to save me on average of $40,000 in taxes because $106,000 just dropped. So that's a huge deal. So that is literally $60,000 in tax deductions to buy a $106,000 car. So you can see that if you know your laws, if you understand the tax laws, it becomes extremely fun to talk about taxes. I love it. So time is money. Obviously, you know, I just want to teach you guys how you can, how your life can be more relaxing and less taxing, because I fail to remember or think about the fact that people don't know this stuff. I've known this stuff for 18 years. It's just, I've just decided to start sharing it. So now this is a deduction that I love, my favorite. You know, kids are extremely expensive. They have sports and they have dance and college and weddings and they have everything under the sun. They want everything. You know, I just went and bought my son clothes. And so what happened, instead of me paying for his clothes, then I hire him, he pays for his clothes. And because I hired him, that becomes 100% tax deductible. So it's a huge deal. So you can pay your kids $12,000 a year. That's because that's the standard deduction, guys. Everybody in this country is entitled to $12,000 a year in a standard deduction. So you hire your kids, you can pay them $12,000 a year. If they're under the age of 18, there's no FICA taxes, there's no unemployment taxes that you have to take out. You don't have to withhold federal or state taxes either. And now if they're over the age of 18, you would just have to take out FICA taxes and then you would match that as their employer. So it's still a huge, huge advantage. It's called income shifting. So my 6 children times 12,000 bucks a year, that's $78,000 that I don't have to pay taxes on, saving me about $28,000 in taxes. So it's just huge. So, and reach out to us if you want to understand this, you know, and I'll share with you more details on it. And then there's social giving. So one of my favorite things, I really believe in what Zig Ziglar says, and it's, if you help enough people get exactly what they want, you'll automatically get what you want. And, you know, that's one of the reasons why I'm doing this Impact Summit, is because I want to teach you the things that I know. And by doing so, we're going to change the world together, because I don't want people going in debt. I want to help people come out of debt. The other thing that I want to do is combine my passion and my profits and teach other people to do the exact same thing. So what we started doing April 15th of 2018, we started providing, for every dollar that came into our accounting practice, we literally were providing whole food, plant-based nutrition to children in need. So for every dollar that comes in, we're providing a serving. And because we're doing that, that becomes 100% tax deductible through my business as a business expense. So you may say, I'm giving already through my business. Yes, you may be. The problem is when that goes to your accountant is doing nothing but taking that giving, those donations, and running that through, if you have an S corporation, they're running that through your itemized deductions. And if you don't have enough to itemize, you don't get any benefit from it. So here's a way to take 100% tax deduction through your business, which lowers your AGI, your adjusted gross income, which is a huge deal for medical bills and medical insurance and all those other things. And it allows you, so it could be for, you know, if you sold this pen, I could sell this pen, and for every time I sell a pen, I'm going to give somebody something. It could be for every product. It could be for every service. It could be for every dollar. It doesn't matter what it is. You just have to come up with the model. And so I teach people, it's like Tom's shoes. So, or Warby Parker, for every pair of shoes, they're giving a pair of shoes. That is 100% tax deductible, and that is considered cost of goods sold. So huge, huge deal. And since April the 15th of 2018, we've been able to provide 635,079 servings of food to children in need, whole food, plant-based nutrition. So that, I love that. It's changed my life. It's provided us tremendous opportunity, I think, outside of giving. And we didn't have the money to give in the beginning. It was just literally we gave, and when we gave, we got money back. Like the IRS sent us a refund check we've been waiting on for 3.5 years, the week after I started giving and providing this whole food, plant-based nutrition. So enough about that. Now, here's what happens if you are making money, okay? We need to talk about that. So there are tons of strategies. We use about 90 different tax strategies with our clients on a daily basis to help them save money. But one of the biggest things that you can do when you start making money is to get an LLC. And an LLC, what it does in your state, it just limits your liability, but it allows you to do one of two things. You can either treat your business as an S corporation for tax purposes, or you can treat it as a sole proprietorship. And most people I see on a daily basis, especially that get into a home-based business, they start operating on their personal name, they start making money, they're not told that they need an LLC, and then even if they do get the LLC, they're not told they need an S corp election, and they're overpaying tens of thousands of dollars a year in taxes that they shouldn't be. So by having an S corp election, and we can help you do this, it's not hard, so you just call us, we'll help you. But what it will do is having that S corp allows you to bypass self-employment taxes almost completely, or at least 80% of it. So here's how it works. You have $60,000 in net income from your business. You would have to pay not only federal and state taxes, but you would also have to pay self-employment taxes. So as a W-2 employee, you pay 7.65%, and your employer matches that at 7.65%. Well, when you're a business owner, you pay the conglomerated amount of 15.3%. So you can bypass 80% of that just by setting up this S corp. So 60,000 income times 15.3% in self-employment taxes, that is $9,000 that you have in self-employment taxes that you would not have to pay. So the first year, you don't have to worry about having a paycheck, but the second year, we would need to help you set up that payroll, and you'd have to do payroll tax returns. But it's literally a couple $100, guys, for you to save thousands and tens of thousands of dollars. And the more money you make, obviously, the more money it's going to allow you to keep. So I tell people, once you get to a point where you're making at least $10,000 in net income, so that's your gross minus your expenses is your net income. Once you get there, you need to go out and get an LLC. You need to treat that LLC as an S corporation for tax purposes. Otherwise, you're going to overpay at least $1,200 for every $10,000 that you're making in income. Okay? So now the next step is there is a new tax law that most of you probably have no clue about. It's called a 20% pass-through entity deduction. And so what it does is, and you don't even have to qualify for it, you don't have to do anything for it, other than take a paycheck from your business. By doing so, you are now entitled to 20% of a tax deduction that you don't have to pay federal and state taxes on. So that same $60,000, let's just say you made it as a W-2 employee. As a W-2 employee, you would have to pay FICA taxes of 7.65% of the entire amount. Plus, you don't get the 20% deduction. So now, as a home-based business owner or a business owner, you would take the 60, you would bypass the self-employment taxes, and then on top of that, you don't have to pay taxes on $12,000 of that money. So that's a huge, huge deduction that you're entitled to. And so in summary, and I'll answer questions after this, but in summary, there's never been a better time for you to have a business of some sort. And guys, I don't care what that business is. I just tell people to find something that you're passionate about and go out and share that with people. What I have found, though, is that by having a home-based business, to me, it's a no-brainer. And that's why my book is literally Why You'd Be Brain Dead Not to Own a Business. But it goes into more detail. The reason why you want to have a home-based business is because you can't write off commuting miles if you have a brick-and-mortar location. So if you leave your house and go to your location, your building, you can't write off the commuting miles there. Then you don't get business use of your home deduction. So those are two major deductions that you don't get access to if you don't have a home-based business. On top of that, having a network marketing business or a home-based business, affiliate marketing, whatever you want to call it, it's minimal to get involved, and you have people who are willing to help you get where you need to go in life. People who've already been there. I can tell you that there's not a single accountant on the planet that I could reach out to today that would help me grow my accounting practice. Although we have grown it massively over the last 5 years, it's grown 60 times, but that's not because somebody's helped us do it. It's because we've learned through trial and error. And so, you know, take the deductions you're entitled to. That's probably one of the biggest things. You know, if someone tells you that you shouldn't write that off. I literally had someone reach out to me last week. She got an email. I spoke at the Top Summit in Mackinac Island alongside Rachel Hollis. And so this girl sent me an email from her accountant saying, hey, I wouldn't take any deductions from a business, a home-based business, because it's not only is it not going to be very beneficial, it's not really going to save you that much money, and it could trigger an audit. That is a straight up lie. That is not true. So do not listen to people who tell you that just because you have a home-based business, you're now more likely to be audited. That's not the case. If you have a business, period, you are more likely to be audited than a W-2 employee. That is a fact, and I'll tell you that today. But the thing is if you are attempting to earn an income and you can show that, then it's tax deductible. So take the deductions that you're entitled to. Hiring your family can save you tens of thousands of dollars in taxes, if not more. So, you know, hire your kids. And I didn't talk about before, what would you hire them for? I have children literally that I hire, my children, I have a daughter who is 17. She's a sophomore in college and a senior in high school. She does data entry for me, and she's amazing at it. I have children who shred paper for me. I have my children clean up the house for me because we have a home-based business. I literally operate my accounting practice from home with 4 full-time employees for the simple fact that I want the home office deductions, and I want to be at home with my children, you know, and they're homeschooled, so I get to see them almost every single day, all day long. So, and I get to do this from my kitchen table. So, you know, I'm at my dining room table right now. And so, you know, what I'll tell you is you can hire them to do just about anything. I have a 6-year-old that invites people on social media for me. I'm like, baby girl, can you hit the blue button? Just hit the invite button. And she will. So, the precedent has been held up in court at age 7 that you can hire your kids to do just about anything. So I would just tell you, hire them, get them to work for you. You have to literally take money out of your bank account and put it into their bank account with their name on it, but your name can be on it as well, and they can pay for the things that they want to buy. So hire an accountant. That's crucial, guys. One, if you do your own tax return, you are more likely to be audited. And you can go look that up. You don't have to take my word for it. But the other thing is that if you do get audited, nobody's going to help you in an audit, or you're going to pay a ton of money to someone to help represent you in an audit. So I don't suggest you doing your own tax return. The other reason is that we literally have to answer about 30 questions saying that we actually took your information to do your tax return. So that enables you to be less likely to be audited. So, I'm not saying, if you like doing your own taxes, do it, but it's not beneficial for you. Obviously, every single time, the last person I had that said, what can you do over TurboTax? I saved them $21,000. So I'm a little bit better in TurboTax because I've been doing this for a really long time and I understand this industry. So tracking deductions, we created a membership for people who just got started in network marketing, home-based businesses, whatever. And so we wanted to give them access to a software, but also give them access to the tax strategies that I have clients that are paying us $5,000 a month to get access to every single month. So I would tell you that if you don't use our software, you need some sort of software to keep track of your expenses. An Excel spreadsheet is not going to work for you if you get audited. Your receipts are not going to work for you if you get audited. You need to take a couple steps forward. And then on top of that, I will tell you one of the biggest things is that if you start treating your business more like a business, you get an LLC. You treat that as an S corporation for tax purposes, you're actually less likely to be audited for having an S corporation as opposed to having a profit and loss from a Schedule C or on your personal tax return. So here is a lot of information. Here's my book. You can go buy my book on morerelaxinglesstaxing.com or our website that's here, otbtax.com. I wanted you to know what we do. I am not just a speaker. I literally eat, breathe, and sleep tax deductions every single day. So we're a full service accounting firm. We work with every single state. We set up LLCs, S corps. We do bookkeeping, payroll, tax preparation. We amend tax returns. We do CFO services, obviously, and I do tax strategy sessions almost on a daily basis. And then we have a membership that is for everyone. It's literally just to give you the software and the strategy. So you may not be making a lot of money right now, but I guarantee you, if you understand that this can truly save you $4,000 to $8,000 a year just by attempting to earn an income, then you would be brain dead not to start a home-based business and start sharing that with people. So I have an offer for you guys. You can receive a $49 tax strategy session from us if you schedule before 8/31 of this year. So go to this website. There's a button down at the bottom that says $49 tax strategy session. You'll get 45 minutes with me, and I will talk you through what we can do. Send us your tax returns and we'll help you. And then I also am giving you access to a $1 membership trial that you can try for 30 days for $1. This is the website that you can go to. You will not find that anywhere else but here. So make sure, and you're welcome to share it. Just make sure, don't plaster it on social media. So this is just for the people who joined us today in the Impact Summit. So here's our access. You can call our office, that's my cell, that'll get you to my assistant, and you can schedule a time with us. So the last thing I want to share before I answer some questions is I have a free Facebook group called More Relaxing, Less Taxing. Find it on Facebook, request to join it. It is no solicitation whatsoever. I mean, every once in a while we talk about our membership, but I typically do lives every week, 2 or 3 times a week, and I put a lot of content in there. So you're welcome to join that. You're welcome to invite your friends to that. And it is just an open group to help you have a more relaxing, less taxing life. So I'm going to answer some questions. Let me see what we have here. So if you have any, put them in the chat. So see, Beyond Leadership, I'm so excited about that. So how do you hire me? So here's the information. You go to OTB Tax, you schedule a tax strategy session with me, and then we are going to talk. Would love your info. My phone's about to die. Okay, so I will send him that information. Do you help in all 50 states? Yes, we work in all 50 states. Can you help me set up my company? Yes. So I already answered that. LLCs, S Corps, all that good stuff. Is it true that you can write off the usage of your home for business? So I already talked about that. And yes, okay, so the pool, somebody brought that up. Deborah Delgado, I thank you. I talk about this typically all the time. But one of my favorite things is fringe benefits. So fringe benefits are a way to get money out of your company without having to pay taxes on it. And so as I was doing research for my book, I literally found, and we just put in a swimming pool, I literally found a fringe benefit that if you work from home and you offer for your employees you allow your employees to actually utilize either a swimming pool, a golf course, a tennis court, or a exercise facility, then that is considered a fringe benefit, and it's 100% tax deductible. If they work on your property. So who are your employees? Your spouse, your kids, okay? They're employees. So I allow my husband and I allow my children to swim in my swimming pool, who are also my employees. And now I have other employees as well that work from home, but it works the same way. If you have employees and they work from your home and you have a swimming pool and you allow them to swim in it, then it's tax deductible. So it's a huge, huge deal. So I think I answered that one. I have had my LLC since 2012. My CPA is saying it's too late to get the S Corp structure. Is that true? No, it's never too late. And you can't go back to 2012, but you sure can go back to 2016, 17, and 18 and do those tax returns as an S Corp election. You would just file a late filing fee. So that is incorrect. It doesn't matter when you decide you want to have an S corporation. You can do that at any point in time in this country. So is it true you can write off your usage of your home for business? I talked about that. The other thing I'd love to share with you guys while I'm thinking about it are meals. So if you provide meals, like if you have people come over to your house and you have an event, then you can write off 100% of those meals. So that's a big deal. That's more of a reason to have your have people come over to your house. So can you hire your grandkids? Yes, you most certainly can. If they're under the age of 18, the same rules apply. If they're over 18, you would just take out FICA. You would have to withhold FICA taxes from them. So, and we can help you set all that up. You can do it on your own, whatever, but we can obviously help you there. So I've already answered that. What about the tax-free Tesla? So I talked about the tax-free Tesla. I hope that I answered your questions on that one, Val. Okay, back to the pool. Is the write-off the cost of maintaining the pool or the bills like water, etc.? So everything. So you can depreciate the pool. So, you know, my pool was $46,000. You can depreciate an underground pool over 15 years. So obviously I didn't get 100% this year, but I was able to take a massive deduction plus all the maintenance that goes along with that. So the water bills, all that good stuff. Yes. Then can you hire other kids if you don't have your own? You can, but the rules don't apply. So it has to be someone kind of in your lineage, your kids or your grandkids. But you cannot hire, yeah, you can't, I mean, and you can hire children that are under 18, but you would have to take taxes out. So it doesn't apply to them. Our children are over 18 and also in our network marketing business. Can we create an LLC that covers all of us? If you all owned a business together, you could collectively have that LLC and put everybody under that, but it's called a family LLC. So yes, you can. We need to talk through the benefits and the disadvantages of being able to do that. So Deborah said, oh my God, I just fell out of my chair, LOL. So, you know, guys, what I do want to share with you, I think is the biggest thing. I did not learn tax strategy in college. And when I was 19 years old working at the largest regional CPA firm in my area, I was a junior. I started college early. I was 16. I graduated by the time I was 20. But I was doing $50 million a year companies tax returns at the age of 19 with no help from my partners. So I would do the data entry, the bookkeeping, I would do the reconciliations, and then I would do the tax returns, and my partner would review that for about 30 minutes. And what I realized is there was no tax strategy whatsoever. And so I've tried really, really hard to give people what I would want, which is the help and the understanding and the strategy around it. So, you know, people just understand we are taught by government employees when we go to college. And so we are not learning tax strategy. So the accountants that you're dealing with, most of the time, they just don't know. They have no understanding of what is tax deductible or not for a home-based business. They don't understand network marketing. Here's another one for you. Here's another tax deduction. As a speaker, if you're speaking, your outfits, your hair, your nails, your clothes, all of those are tax deductible. You know, so if I get I got a pedicure today, I got my nails done today, I got, you know, if I get my hair done when I'm speaking at Beyond Leadership, that's obviously tax deductible. I buy new clothes. All of those are tax deductions because I need them to run my business. It would just be like having a uniform for a painter. They need a uniform in order to run their business. So I need a uniform when I walk on stage. And everything that's involved in that uniform, which in this case are really nice clothes and hair and all that stuff, then that becomes tax deductible. So I had a client this year that we took on, and she had a full-time CPA. She had a bookkeeper who was doing all of her work, this accounting firm, and she was paying them a lot of money. We went back and amended her tax returns and found that she overpaid $45,000 in 1 year. And guess what? All the information was there. They were just literally taking, because she was a high income earner in a company, and what they were doing is they were taking her income that she was receiving from getting reimbursed for events that she was setting up, and they were taking that in as income, but they were not expensing the event planning that she put into place. So she was paying for all this food and paying for these event centers to have presentations, and they were putting that to shareholder distributions. So we ended up finding her $100,000. And just in the last 10 days, I've been able to save $58,000, $27,000, and $36,000 that people have overpaid in taxes due to their accountants not understanding their business or not treating them as an S corporation for tax purposes, period. So enough about that. So no one in my company will talk taxes. I'm getting into high five figures. My taxes are stressful, filing a 1099 self-employed. I would tell you to go here and book a tax strategy session, and I'll be happy to talk. But you can also get lots of free content, guys, in that more relaxing, less taxing group. So I talk about it all the time. Can you have more than one network marketing business and receive deductions? Yes, you can't double dip. Like, obviously, you can't duplicate deductions. But yeah, you can have multiple network marketing businesses. Can you explain the two different tax codes? Yes. So I love it. Tax codes. We have two tax codes in this country. And I talked about it in the beginning, but the one is for W-2 employee and one is for a home-based business owner or a business. It doesn't matter if it's home-based or not. So we get the same tax laws as Amazon and Walmart. And I don't know how many of you guys just saw recently, but Amazon made $11.2 billion last year and they didn't pay any taxes. Walmart pays on average of 0.12% in taxes. And the reason why is because they have nonstop tax attorneys, CPAs, and tax strategists that are doing nothing but trying to figure out ways to keep them from having to pay in taxes. And so you have the same benefits and have the same tax laws that apply to you by having a home-based business. So we have the W-2 employee that system was created to take your wealth. Seriously. Then we have the home-based business owner or the business owner that was to help you create wealth. So literally a business owner creates more income, increases our economy, makes us more money, so there's more money to go around, and then they hire employees. And because they do all those things, employees, somebody's got to pay the taxes. So employees end up paying the taxes. And it makes perfect sense, guys, because there's no way that as business owners, we could hire employees, create more economy, and spend all of our money trying to make more money to help the economy if we had to pay 40% of every dollar we make in taxes. So I hope that made a lot of sense to you. So let's see what else. Rhonda, go to OTB Tax and book a tax strategy. Yes, and yes, so go to the site. So if there's no more questions, I mean, I think we're like right on the dot. This is 1 hour. I will be happy to answer some more. And, you know, I hope you guys have an amazing day. I'll move this information. I don't know if you can see my Zoom box here, my chat box, but I thank you so much. And I hope you have a great day. Go and book a tax strategy session, get your $1 membership trial, buy the book. It'll help you save $5,000 to $10,000 a year. Actually, if you do the membership, you get the book for free. I forgot about that. So do that. And I hope you guys have an amazing, amazing night. And I thank you so much for listening to me.